Okay, so let's get into the service from all of the perspectives from where I'm at with the service and how you could make the most out of it. Now, I run a portfolio. 80% of that is investing, and 20% is trading. So from an investment side, my allocation is 20% Bitcoin, 10% MSTR, which is strategy, 25% Tesla, 10% NVIDIA, 10% Solana, and 5% of other smaller assets. We've got Cantor, we've got DeFi Dev, we've got Circle, and so on. So that is my allocation to the markets. Now, what you need to know is that my allocation is maybe not necessarily your allocation, and we'll get into that a little bit more later. But I'm happy. All of these assets are extremely volatile, as we've seen. We've seen them move rapidly to the upside. We've also seen them move rapidly to the downside. Any one of these assets could, lose. As we've seen recently, Bitcoin down 30, 40%. Tesla last year dropped 50%. So they're very, very volatile assets, and volatility is not something for everyone. So if people want less volatility, I suggest lowering that volatility by just being in Bitcoin, Solana. QQQ is the ETF for the NASDAQ. SPY is the ETF for the S&P 500 and the DAX. So it works out a slightly different portfolio in terms of percentages. What I've found and feedback from the guys in the program mainly is a little bit of a mix of the two. So you need to see if you can handle volatility or not. Sometimes my personal goals are not your goals, and my intention with the service is not to go, okay, well, this is what I'm doing. It's really more for you to just feed off that, know those companies, know where I'm getting in, and then sort of build your own portfolio off the back of it. Now, one of the main areas for the service is Discord. All of the investments are posted live into these channels. There's 4 channels. Not every one of you will have access to 4. If you're part of the investment program, you will have access to the long and the short-term investments and the news feed. And if you're part of Inner Circle, you will have these 2, plus my short-term trades, which we've been doing recently, like leverage trades, which have been posted out. These are a lot more frequent, and for those people in investments that just want, less frequent trades coming through, investments and trades, that's fine for you. But this room, I'm posting something every day. Am I active every day? Probably not, but I can be active up to 1 to 3 times a week managing trades. So that's not for everybody, but if you're in a circle, you will get those trades coming to you there. And then, of course, questions for me or questions for the community can be done in the Discord channel as well. Now, one of the main Bibles of the program is the 5-Minute Investor and the weekly live update. Let's have a look at the 5-Minute Investor. This is a sheet that you will have a link to on joining the program. You'll get a link sent to you every week because it's updated every week. The key things here with the 5-Minute Investor and trade log is that every single post that I've done on Discord is also recorded on here. So if an investment has gone out, it will be put onto this sheet. So if you ever sort of get behind, you can refer to this sheet. Let's look at the top line. This is from April the 1st, from my move over from Magnetic. So if you've been with me for a long, long time, maybe through the Magnetic investments, all of the Magnetic investments, the portfolio that was transferred over was here. This is what we were in. And from the 1st of April, I started logging any investment I took here. So let's just run through the first one. 7th of April, Tesla our allocation to Tesla, as you know, is 25%. I bought 10% on that day. I allocated 10%, which took our allocation up to 17.5%, because I think probably what was carried over from Magnetic, it was 7.5. So it took us up to that. Of course, it was a buy. This was the price. And then this gives you the average price of what we're currently in the market on that date. This is what we're averaged at over all of the purchases. And as you can see, there's further purchases, and that average price changes. That's the price that we bought, how much we bought. And it rolls so on and so forth up until these last ones. These are the last investments. Also, that rings true for any of the ETFs for the lower volatility and for the short-term trades as well. Short-term investment trades, they are all logged here. Any leverage trades I've started to log here. So again, the dates, the markets, what they were, entries, stops, first targets, second targets, and how much return we made on the trade. That will be, if we risked 1, we got 1.8. If we risked 1, we got 1. Risked 1, we got 1.2, 1, 1.8. So this will give you an idea, or of course, if we lose, that would be a minus 1 if you risked 1. So that is all there. Then also, if you get behind, the thing that you need to do every week as a double check is just check the 5-minute investor. This is the first tab here. This gives you, again, here's our allocation. Here's what we're currently allocated in the market, or rather, here's what I'm currently allocated into the market. So you can see a lot of these I'm fully allocated into the market. So if you were coming in new to the program, you'd want to start getting allocated to these assets. And that's where the DCA, which stands for dollar cost average, comes into play, where I'm putting the dollar cost average levels, 78,000, 130, or Tesla, you can buy below 430 or 375. So these are updated every week, and you need to keep up to speed to these, particularly if you're not fully allocated. I will do my best to alert you on these if these levels are hit, but I won't always, because I'm not always placing more money into the market. Also note, I can be fully allocated, but I might have more cash. At the moment, I have more cash, which means my portfolio has grown, but the allocation will remain the same. So I want to add in to, say, Tesla or NVIDIA. I'll be putting alerts out when I do that. Equally, for very high conviction levels, I have orders. So these are orders in the market. It might be that the market goes to those areas while we're sleeping, while we're not at the screens, and we just want to have orders into the market for those. Give you an idea here of where I'm looking for the next profit target. I think I'm going to add in overall profit targets as well, maybe sort of 3-year targets, just to give you a bit more of an idea. And then every single asset has a chart, which we go over every week. Bitcoin nicely has broken out of that range, guys, so that's fantastic to see. 1, 2, third day out of the range that we've been sitting in for a while. So those charts are there for you. And just while we're here, this is on TradingView. Let's just show you how, for those DCA levels, if you want an alert, let's just show you how to do it. It's really simple. You go to the drawings here, you get a horizontal line, you put a horizontal line on the chart, and you put an alert here, and it sets an alarm. And you can move that to anywhere you want. So 78, I mean, I've already got an alarm, but let's just do it for completeness here. You want to move it to 78. Now that, if that 78 level hits, then an alert will come to your phone, alert will be sent to you by email. So you just don't miss those. So it's important every week So just go through these levels every week. That's why it's called the 5-minute investor. It takes you 5 minutes to look at the levels, see where the DCA levels, see where you're at with the allocations, and see if there's any orders. And that will be the same here for the lower volatility. Equally, here there is all of the 20% for the trading side. For the shorter term trades, here's all of our allocations. Here's the average price. And then just for completeness, if I have taken a trade in the last week, this is updated every week, I will log it here so you can see it. It is already here. It's already on the log, but just for completeness, for that little overview for the week, so there's nothing that's happened in the last week apart from, I'm not going to put leverage trades here because they come and go normally within a day. So there's no point putting that here. The point of me putting them here is if you've missed something, and it might be that you can still get in, you might not be able to. But at the very minimum, every week, you check this, it gets emailed out to you, it gets put into the channel. You check this every week, and then that keeps you absolutely square with the program. Okay, so that is absolutely paramount. I do a live update every week, which just really goes through all of this and through the charts and through also through the news, if there's anything particularly topical as well. I do post those also in the news feed. A lot happens in the market day to day. There's a lot of noise. There's a lot of news. I try to just condense that to perhaps relevant points for our assets, which are normally maybe 1, maybe 3 points a day. Sometimes I won't post it and just do an update at the end of the week. So let's just understand investing versus trading in my portfolio, because they have two very, very distinct purposes for myself. And again, I want you to understand where I come from, so then you can operate accordingly. If you can understand me, then you can know perhaps what's right for you. So for the 80% side, the investing side, I'm really focused about creating growth for those assets. I'm holding those for extended periods. The emphasis here is on capital appreciation and compounding. And then, if the market gets up to certain levels, I might take some out and then I'll let the market come back and I might add in. The key thing here, what you need to know from my investing perspective, is I'm not taking any money out. I'm just leaving the money in. I'm trimming sometimes, letting the market come back, and then I'll go back in again. There's no money coming back to me. I'm spending no money at all. So that's where really the trading side comes into play. Whereas this side, using 20% of the portfolio, I'm targeting shorter term opportunities from a non-leveraged perspective and from a leveraged trade perspective, like we've been doing currently, to create income, because I'm not taking anything from here. So I need some cash flow. And that's where this comes in. Those could be a couple of days, could be a couple of weeks, could be a few months, those particular trades, or certainly for the leverage side, it's normally just 1 day maximum, sort of 2 days. But the key point is I want to create cash flow. And what you need to understand with that cash flow is, much like any business, it's going to go up and down. So 1 month we might not make any money. 1 month we might make a lot of money. So normally what I do is I sort of try to span that out, keep a pot where that money's going in, and then sort of draw from that pot accordingly. So the 80%, as I say, the purpose is mainly for growth. And I think something that's really important to understand is I'm looking for very high potential assets. I'm looking for them to grow over 3 to 5 years from 1 to 10 times. 2 to 10 times. So that's a 200% to perhaps 1,000% return over that period. And sure, they can grow very quickly, or they can take quite a bit of time. We might go through some drawdowns through that period as well. But that is really my expectation of those positions, that those positions are there to be held for the longer term, and sure, I'll come in and out of the position accordingly. But again, they're longer term positions with the view that we're going to make sort of significant returns over time. And a target really for that, the CAGR returns, the annual return, really targeting plus 20%. Currently, for the last 3 years, I'm at 45%. That could tend down. I'm perhaps not always going to stay that high. If I did, I'm probably going to be a world-class investor. But certainly at these levels, we're doing very, very well. So it gives you a bit of an indication. As I say, really, I'm not income focused at this stage. The goal is purely wealth accumulation. There's no dividends. There's no yields or secondary capital gains for that. So that gives you a sort of rough idea. This was actually in October, back in when we were in Bangkok. This is when I did this last presentation. So for myself, 3 million over that period, an 180% return over a year from October. Appreciate we're a little bit further on into January now, 29%. So a little bit less than the overall 45%. So we can see that not every year is going to be a standout. In fact, we might have a negative year, and we definitely need to be prepared for that as well. And we might have, 100% year as well. So the trading portion, the 20%, as I said before, it's really income generating, where I'm using either leverage or non-leverage opportunities in the market. That will be on US stocks. So it could be like we've got positions at the moment in Tesla. It could be Nvidia. It could be strategy. It could be crypto assets like Bitcoin, Solana, which we're in. And really with these, I'm aiming to return, if it's a non-leveraged trade, I'm looking to return 5 to 40% per trade. It's not often we'll get 40% out of a trade like that, but anything 5 up, sometimes we get very, very high returns. I'd probably say averagely normally it's around 10% I'm looking to get from a trade. So if we put $20,000 into a trade, I'm looking for $2,000, maybe a little bit more to create a little cash flow. And those can be days, they can be weeks, they can be months. And what we saw earlier from the 5-minute investor, if we do have a leverage trade, I want more than 1-to-1. There was one trade that was less than 1-to-1. I'm normally looking to get, if we risked, say, $500, I want $750, something like that. And I just put a little comment in here just from my own experience as well. It's just remember trading takes time, and it is kind of swapping your time for dollars, of something that I got quite stuck in over the years, of why these days I much prefer the investment side, because it can create a larger amount of money for me. But I have to be very, very aware that the trading side is very much like a job. Typically, I'll spend 2 to 3 hours a day, maybe more, sitting and trading. So again, you need to just think for yourself about that. Is that what you want for your lifestyle? As I say, for many years, I just focus on trading. And it does get to a point where you will ultimately make more money from your investments than your trading, but you do need cash flow as well. For me to earn $1 million in a year is quite hard, but as you can see, it was achieved on the portfolio side, albeit that I'm not really taking any of that money at the moment. Okay, so how does this portfolio really apply to you? As I say, I'm 80% trading and 20% investing, but you could be 50% trading, you could be 50% investing. Maybe you need more income than you do investing in the shorter terms. So you need to build up some capital to put into your investing. Maybe you're a bit like my son, which is like he's 80% trading and 20% investing. So he's trading loads, putting some into investing, but he's wanting to turn his money. And it's maybe, you've got a smaller amount of cash. Say, for example, you're 10, 20,000, you want to trade more of it to put a little bit of into investing to build your investing side up. What I wouldn't recommend is ever just 100% trading, because as I say, it purely is trading is a job and it's income and it's fine. But with that income, hopefully you get to a stage where you've got more income than you need. Then you need to do something with that money. And I can tell it from my own experience that I just traded. I just wanted to trade a larger account, when I just didn't actually need it. I should have been investing a lot earlier. So I'd never recommend anyone just to trade alone. Okay, so let's get into some of the mechanics then, from the basis of, what do you use to buy, to sell the assets that we've got in the portfolio. So the key things is US stocks. That's my main go-to, and ETFs. All of those, so US stocks, ETFs on the Bitcoin, ETFs on Solana, they can all be bought via Interactive Brokers, which is what I use. You can use Charles Schwab as well. You can use your private banking. I also use my private banking in Singapore sometimes to buy stock. Just be careful with private banking. They potentially have more fees. My bank has more fees. They have custody fees as well, which Interactive Brokers don't. So it's always worth comparing on that. And for you guys, in Australia, UK, you may be using a pension scheme where you're buying within. Just a quick note: I don't think many people are in this category, but if you were in Indonesia, for example, it's hard to buy US stocks, so you can use X stocks and buy them over the crypto markets. Oh, let's go back. For the crypto side, mainly for the investment side, I'm all ETFs. I don't like to hold the Bitcoin. I'm not as tech savvy as I'd like to be. I'd probably lose my portfolio. So I just keep it with Interactive within the ETFs. However, now and again, certainly from the trading side, or perhaps the ETFs aren't open, they're only open 5 days a week in trading hours. So we do have to have a way to be able to buy Bitcoin, Solana, or other crypto assets. So for that, personally, I use Binance and Kraken, but it just depends where you are. But those are the key ones, and Coinbase is something that I don't use. Binance and Kraken for me seem to have the best fees. You can also use decentralized exchanges like Hyperliquid or Drift. But as I said here, I prefer to use the ETFs for the investment side. This tends to be for my trading side. And this is out of date. Sorry, guys, this is just from October. But now we do have the Solana ETFs in place, and they can be bought through Interactive, or whatever your chosen method of buying stocks is. It could, as I say, it could be through the bank, could be, if you're in Australia, through CommSec. So leading on to the short-term trading, again, focus on indexes, US and DAX, and some crypto assets. Personally, we've always recommended Go Market, so I know a lot of you are with them. You can use IG, you could use Pepperstone, you could use really any CFD broker out there. I do, certainly if we're going to get into some swing trades, I probably prefer IG because I can get a futures contract if I'm going to run something for some time, say, for example, on the DAX or whatever. I might just highlight to you guys, this is a swing trade. Most of what I'm putting out at the moment are just day trades, so you can just use a CFD. The difference is that you'll pay more on spread for a futures contract, but you won't get the daily fees, the daily interest fees, whereas CFD you will get daily interest fees. And as I said before, for the shorter term stuff, Binance and Kraken primarily is what I recommend. Alternatively, you can use Coinbase, but as I said, the fees are a little bit higher on those exchanges. So lastly, I just want to highlight kind of just having the right mindset. I always loved a book called 7 Habits of Highly Effective People. And one of the concepts in there was really the law of the farm of, you must prepare the grounds, plant your seeds, cultivate, water, and then you can expect to reap. And I think that that's really where any business or any money-making endeavor needs to be at. It does take time to cultivate a portfolio over time. And I just want to sort of really highlight that, particularly for people which are coming in new. You might be looking at, right, it was really okay for those guys because they bought Tesla at 160 or they bought Tesla at 200. Now it's 400. I'm getting in late, or feel like you're getting in late to the party. But I thought maybe I just highlight, this is a sheet from Magnetic Trading back to 2022. And you can just start to take a look at some of these prices that we were buying back then. 14,000 on the NASDAQ. It's about 25,000 at the moment. DAX, 14,000 again. It's about 25,000. So it's more just to highlight Bitcoin, 21,000 we were buying. But we bought Bitcoin back in April last year at 77,000, and it's gone higher. It actually went up to 126,000. So everything is slowly going up over time. You just need time to build the portfolio. And, it might take a year, it might take a couple of years to get that portfolio to the right space. So just be aware of that. It will take a bit of time to get to your right average price. You might come in and the market drops and you might be underwater for a year or so. But look, the strategy is 3 to 5 years, certainly from the investment side. So it is really good. Just getting that mindset that money's tucked away. Don't worry about it if it goes underwater for a bit. We'll just buy. We'll just be continuing to buy the asset as long as the narrative remains true to what we believe. Just again, have sort of realistic targets. The S&P 500 typically gives you an annual return of 10%. So of course, I'm looking for more than that. I'm looking for 20% plus. But yeah, just be realistic with the returns. Be prepared, unfortunately, for a crash. We're going to get one. The market's going to drop 20 to 50%. That's just the way it happens. Hopefully, we're a little bit out of the market and we've got more money to put in. But sometimes we're going to have to just sit through it. We can look at every single crash. They've all come back. So I don't see that, certainly for the American markets, changing, and just having this sort of emotional resilience of just some kind of coping mechanism to know that not to panic, not to sell out. I've seen it happen over the years. Clients coming in, buying, market goes completely wrong for a while. They lose hope, they sell their assets, and then they come back and they're buying in on it. So don't do that. Just stick with it. But I think the key thing with that is to really have confidence in the asset that you're buying. So know the asset. Don't just take it from me. I will be giving you a lot of information about that, but just make sure that you have confidence in the projection for that asset. Do you also agree with me that this asset will go up over long term? Tesla, for example, as soon as Elon got involved with politics, the stock dropped 50%, but nothing changed with the company. The roadmap was the same. So we just bought more. Nothing's changed. It's just external things happening, which can happen in the markets. But just having that confidence in your assets will keep you long term. If you don't have that confidence, or you don't know enough about the asset, or don't believe in the asset, when you get squeezed, you'll come out and you'll sell out because of fear. But of course, volatility is opportunity. So when those drops happen, like Tesla, dropped from sort of 490 down all the way down to 215, which we bought up on the tariff liberation day. These opportunities will happen, and every cloud has a silver lining, and the silver lining is that we can buy more. So again, also just having a little bit of a focus on what's the difference between the mindset of trading and investing. Trading, of course, is a very short-term focus. You might be risking smaller amounts of money. You could be risking $500 a trade for immediate gains. An investing side carries just a different psychology. You're going to be investing larger amounts of money. How do you feel about that? That's going to be sitting there for some time in the market. And then just balancing the pain and reward, accepting the short-term portfolio and the volatility, and the longer-term gains, which will manage themselves over time. So once you've cultivated that portfolio over time, even the big dips don't even touch your levels. For example, I'm probably averaged in Bitcoin about 36,000. So, if it drops to 70, there's no way I'm still 100% up. And these drops, unfortunately, they just do happen in the market. And I'll show you exactly what happened last year to me. At this point in January last year, I was up almost 700,000. By April, on tariff liberation, I'd gone from being up 700,000 to down on the portfolio, unrealized loss, by the way, down 14%. But then when I kind of look at things, and if we go back to here, well, I'm up 3 million, so now I'm down 1 million. So overall, I'm fine. And it's just having that, thinking that you will get those swings. And overall, the Nasdaq was down 20%. I'm down 14% in my portfolio. It's not that bad. So just getting things into perspective, I think it's really, really key, because otherwise the market will shake you out. And that's what it's really sort of designed to do. So that's it, guys. That is the service overall. So with that, if you've got any questions, let me know. Because this is going out on a recording, I'll just say if anyone's got any questions, they can email me in. But that pretty much gives you how the service runs day to day, and gives you the thinking from my perspective of what I am delivering.